معرفة.
Alaikum salam wa rahmatullahi wa barakatuh, and thank you for giving me this opportunity to share with you some of my thoughts. I mean, it's an interesting question. I would say that instead of I choosing Islamic finance, I think Islamic finance chose me. In a way, I graduated in law, I practiced law, and then I was in Harvard for my postgraduate. And during my postgraduate studies, there was a gentleman called Iqbal Khan. He is one of the greatest pioneers of Islamic banking. He came to Harvard to give a lecture on Islamic finance, and I happened to be at the lecture. And after the lecture, we met and we discussed about some of the critical issues facing Islamic banking at that time. This was in 1997. And he was very excited to meet the students at Harvard, and he then offered me to join him in Islamic banking in 1998. So in a way, I was fortunate because my first degree was in Islamic law and common law, where I had formally studied Islamic law of transactions or muamalat, and I was trained in fiqh and the various branches of it. So I had the basic tools that an Islamic banker required, and I had the greatest fortune of meeting with Iqbal Khan, who offered me a platform to join and spread the good work of Islamic banking since 1998. Well, I started in HSBC. Given my background in law and Sharia, I came in to set up the Islamic banking department, particularly the Sharia department. So I set up the Sharia department. I was the first head of Sharia in HSBC with a global mandate. And I was also looking after the transaction management part. So whenever a transaction became mandated, so I would basically start from the term sheet all the way, managing the transaction documents for the originators, we call. So we had a lot of people originating the deals, but I was managing the transaction aspects to ensure that it is end-to-end Sharia compliance, from the term sheet to the documents, all the way to the drawdown. So that gave me a holistic picture of all the deals being done in HSBC. So after doing it for several years, I then asked for a specific mandate to actually start originating myself. So why help, in the transaction process when you can actually go and originate? So I was given a mandate to develop the sukuk market. So back then in the year 2000 and 2001, sukuk was unheard. People didn't even know that a sukuk can potentially be an important tool for the Islamic banking industry. So I was given the mandate to come up with a concept paper for sukuk, and we drafted the concept paper utilizing the ijara method. So what we did was we enhanced the ijara to allow for tradability. And given my background was in law, I had specialized in securities law, and with that securities law background, I was able to design the sukuk on the back of a trust instrument. So we picked up the trust instrument, which met almost 90% of the Sharia requirements, and then built in the ijara concept and became the first tradable ijara certificate using the trust concept. Since then, sukuk has been basically designed on the back of the trust instrument, and today sukuk is probably the most important instrument in the market today. And after HSBC, I was then headhunted by ABN AMRO to set up their global Islamic finance franchise out of Dubai. So I set it up for them and looked after both the cross-border business, including syndicated financing. We also looked at sukuk, local currency and foreign currency. We also developed the retail business in the UAE and Pakistan. So today ABN AMRO, although the business has been sold to RBS, it was developed during my time in ABN AMRO. And subsequently I moved back to Malaysia. I joined Citibank. And Citi, again, I was responsible for syndication and sukuk for Asia Pacific, and also retail and commercial banking business in Malaysia. That also gave me, a different perspective, having worked in the Middle East and the UK. I now have the Malaysian experience. And after that, I was in Fajr Capital, an investment holding company that basically looked into investment in the Islamic financial space. That again gave me the perspective from the buyer's side. So previously I've always been on the sales side. Now on the buy side I could see the challenges that a buyer of Islamic finance services encounter. So that gave me a complete holistic picture. So having started my career in Muhammad Ismail & Co. as a lawyer, and then having gone to Sharia and then transaction management and then to Sukuk origination, into business development, and also finishing it with Fajr Capital as principal investor in the Islamic financial sector, I think I was very lucky to have the holistic picture of the various aspects of Islamic banking and finance. So if you look at, when I was in practice, legal practice, I was at Muhammad Ismail & Co. And at that time when I was hired by the Islamic banks to do the documentation, I felt, surely, the bankers could have done much better than this. Because all the Islamic bankers were doing is trying to design the Islamic products in accordance with the norms of conventional banking. So you take a conventional, say, syndicated loan, and you tell the lawyer that, look, I want this conventional syndicated loan to be structured Islamically, but the economics should be the same. So if the tenor is 5 years, here will be 5 years. If the pricing is 5%, Islamic banking syndication will also be 5%. If the risk is credit risk only, secured by collateral, other guarantees, you will also need the same thing. So I was a bit frustrated as a lawyer, and when I had the opportunity to be on the banking side, I thought I could do a lot of difference. So it was very exciting. I felt that, probably now, having seen the constraints on the legal side, maybe I can do much better on the banking side. So I went to banking, and after more than 16 years, I find that the same challenges prevail today, if not greater. So when you move to banking, you find that, well, you may want to explore different structures that involve, say, profit and loss sharing or risk sharing, as we say. The issue is, like the lawyers, where the instruction comes from the banks get the instruction from the end user. The corporates come to us and say, look, I want financing, Islamically structured, but I would not pay more than what I would pay for a conventional loan. So if I'm paying 5% for a 5-year conventional loan, I would also pay only 5% for a 5-year Islamic financing. So when the pricing is dictated by the market, the end users, you find that in life the pricing has to match with the risk. The risk and reward has to match. If the client is only prepared to pay 5% for 5-year financing, you cannot do a risk sharing, because the 5% pricing was based on the conventional loan, where the conventional lender or bank is only taking credit risk of the borrower. That means if the business of the borrower fails, he has full recourse to the borrower and the collateral and the credit enhancement he has received. So since the 5% is priced on credit risk analysis, Islamic banks, when they also get the same mandate to do Islamic financing but at 5%, they have no other option but to structure the Islamic financing to shadow the conventional credit profile. So Islamic financing, we will buy the asset, we will sell it to the customer at 5% profit payable on a 5-year term. The end result is we are taking the credit risk of the customer. The customer's business may flourish, we are not going to get a higher return than 5%. If the business diminishes, we are not going to get less than 5%. So while the industry tries to make changes or tries to aspire to make a difference, the market dictates that I want 5% pricing, or I want a pricing which is similar to conventional. So the pricing is the biggest challenge, and the expectation of the customer is you must meet the pricing or lower. Now we can't be lower than the market, otherwise you will be creating what we call an arbitrage. People will be moving to Islamic because it's cheaper. But then the depositors will say, I want the same price as conventional deposit. So while depositors come to us and say, I want to place 3 months deposit with you or 1-year deposit with you, they always look around, shop around for the best rate on the conventional side. If the conventional banks are paying 3% for a 5-year deposit, they will say, for a 3-month deposit, they will say, give me the same 3% for a 3-month Islamic deposit. So as a bank, you have a 3% cost of deposit, and you have to receive 5% from the financing. So it's very difficult to maneuver. You can't pay less to the depositors or charge less to the customers, the obligors who are taking financing from you. So the ultimate, the ultimate test is, are the consumers prepared to pay or prepared to share the risk and the reward for being an Islamic transaction, for entering into an Islamic transaction? Are they prepared to pay a higher reward for sharing the risk? So ultimately you find that the banks are intermediaries between the savers and the users of funds. So the savers of funds dictate. They want to protect their deposit. They want the banks to protect the deposit. For a risk sharing platform to work, what is risk sharing? Risk sharing means the savers are sharing the risk with us. They're saying, this is my savings, I want you to go and invest and share the risk with me. But we're not seeing that kind of depositors. Whenever the economists, Islamic economists, come and say that, look, why are you not doing risk sharing? First question I ask is, have you put your savings in risk sharing, Mr. Economist or Professor? I always ask the professor, you want to do risk sharing, how much of your own savings you have put in risk sharing? Right? So far I have not seen any customer with deposits coming and saying, let's do risk sharing. So the challenge is to get savers to say, I don't want the protection, the deposit protection you get in all the countries, the deposits are protected. When you get deposit protection, that basically stunts the appetite, basically kills the appetite for risk sharing. So why would someone, Muslim or non-Muslim, saying that, look, I will forego the deposit protection by the state, and now I'm now going to give my hard-earned savings to an Islamic bank to share the risk. When the deposit protection is available, nobody wants to share the risk. So when the risk-sharing appetite is killed at the inception, Islamic banks are forced to protect the deposit. They have to pay on demand whenever the customer wants. So they have to structure their financing. They can't have, on one side, all the deposits are protected and on demand. You have to return the exact amount on demand, and you are then forced to go for risk sharing. The mandate is not there. If all the depositors come to an Islamic bank and say, here are my savings, you put in risk sharing, put in mudaraba, put in musharaka, then the Islamic bank can go and invest in mudaraba and musharaka. But when the depositors are all unanimously saying, I want my deposit to be protected, I want it to be liquid, anytime I want the money back at the principal amount, then I have no mandate, zero mandate to go and invest the deposit in a risk sharing or Sharia based product. So it has to start from the deposit side. And one of the reasons why the risk sharing is not growing is because people have other alternatives. Right? Muslims often would not go out and buy non-halal meat because they will look for halal meat. But when it comes to financing, they wouldn't mind putting the money in a non-halal deposit. It is an Islamic deposit is often a nice to have instrument as opposed to a halal chicken. It's a must have. So Muslims often make a distinction when it comes to financing. They will go out of the way to get halal food, but will not take the effort to put their money in halal. I'm not generalizing, but that's the experience we've had in many countries where people are indifferent towards halal or non-halal financing. It is changing though, but it will take some time before the shift happens to become truly Sharia compliant. So idealism is an abstract concept. It evolves over time. What is ideal today may not be ideal in years to come. People are always aspiring to higher idealism. So what we find is, within the constraints we have, when we have depositors demanding the deposits on whenever they want, and they are not prepared to share the risk, it is very difficult for Islamic banks to go for risk sharing, which is basically what we call mudaraba and musharaka. So we have to, given the constraints, have to ensure that our murabahas, our ijaras, our salam, our istisnas, our sukuk, although they are what we call risk transfer instruments and products, these risk transfer instruments and products have to be as responsible and sustainable as possible. What I mean by responsible is, to ensure when you give this risk transfer product, we must have a higher due diligence process. so that the customer who gets this product has the means to repay. That means he is not over leveraging. He is not using this for speculative purposes. He is not using this for investments which are not useful or which are not beneficial to the society at large. So there must be an analysis beyond the halalness of the product. So this is where the Quranic guidance, where Allah subhanahu wa ta'ala says to Muslims that earn income which is halal and tayyib. Now if you look at that verse, why should he mention halal? If you analyze, everything which is tayyib must be halal. I can't think of an income which is tayyib but not halal. Right? In order to qualify as tayyib, it must necessarily be halal. Same thing as tayyib food. Quran advocates Muslims to eat food which is halal and tayyib. So if you analyze, Quran should have simply said eat food which is tayyib, because tayyib would include halal. The reason, in my view, why there is a distinction between halal and tayyib is, of course, Islam aspires the Muslims to go for the highest ideal, the maqasid of Sharia. But often you find Muslims or society falls short of the ideal standard. So the minimum standard is halal. That's why the Quran says, eat food which is halal and tayyib. If you can get halal, that is good enough. But if you can aspire towards tayyib, that is the most preferred. So Islamic banks also fall within the same category, that we should aspire to make our halal products, right? All our products are halal because, number one, the product structure has been scrutinized, has been reviewed by the scholars, and the elements of riba and maisar and gharar have all been eliminated. So what is left is whether the halal product is behaving in a tayyib manner. So if a halal product like tawarruk has been used to increase leverage in the system to the extent the customers have now been burdened with so much of excessive debt they go into bankruptcy, that means that halal product has behaved in a non-tayyib manner. So in my understanding, when we talk about Sharia based, it's not only risk sharing is Sharia based. There's a misunderstanding in the market. The moment you talk about Sharia based, people think it's only mudaraba and murabaha. In my mind, that's not what the Quran says. The Quran is talking about making the income to the banks as halal and tayyib. So if the tawarruk, which is a risk transfer product, or murabaha, a risk transfer product, has been sold in a responsible manner to a corporate who is in a business which is sustainable, then the income is tayyib. So you can also give mudaraba, which is also tayyib. But to say that all risk transfer products are not tayyib or not recommended has no basis in my mind. So the challenge is, how do we move from halal to tayyib? So Islamic banks need to have a separate department, which I would call a responsible and sustainable financing department, looking into the finer details of the sales of the product. When you sell the product which is halal, how do you ensure that the product has been consumed in a tayyib manner, has been used in a tayyib manner? So that angle has not been focused yet at the moment. So we need to create that awareness and create that right platform to launch the tayyib concept. So if you look at not only the last crisis, but more than 100 crises that have happened in the last couple of decades, you find that there's one common thread permeating all these crises. And there's a good book by Rogoff and Reinhardt called This Time Is Different, where every time before a crisis happens, the policymakers always say, no, this time is different. This current situation is different from the previous crisis. We are more fundamentally strong. Our markets are stronger. We have better regulations. And then suddenly a crisis happens. So this book analyzes whenever the policymakers have said this time is different, right? We are much better than the previous time when the crisis happened. That's when a new crisis happened. And when they analyze all these various crises in different parts of the world, they find that what triggers is basically an excessive state of leverage. So this has been highlighted by the likes of Hyman Minsky, who basically said that after a crisis there will be a period of calmness when there will be a growth of leverage. And then because the calmness has prevail for such a long time, and rates are normally lower at the time of prosperity, people will have more exuberance, what you call the irrational exuberance, and they will be consuming more leverage. They will be buying bigger houses, bigger cars, bigger buildings will be developed, bigger roads, bridges, all the heavy, illiquid infrastructure will be built. So the money will be locked in through excessive leverage. And suddenly there will be a turn of events where people will feel less exuberant, and the moment they realize that these assets have been overpriced, they started deleveraging. And the deleveraging will accelerate in such a fast pace that it will end up creating the shock, the crisis, and the asset bubble will burst and prices will drop, and the deleveraging will have a severe consequence to the economy. Now, Islamic banking, by building in the tayyib mode, we can potentially control the growth of leverage by saying that, look, the leverage has to be tested whether it's responsible from the borrower's perspective as well as the financier's perspective. Although we say there is no interest in Islam, there is credit in Islam. When you give murabah, it's a credit. There is a financier-borrower relationship, right? Although he's not borrowing money, he's actually a creditor. So credit actually can be created and can also be extended quite excessively in Islamic banking. So only through tayyib standard you can actually control to ensure that the financing is responsible and also sustainable. And when you put in asset-based, although it's not backed by assets, it is based to assets. So every time you give financing, to ensure there is an asset behind it, and there is a close relationship between the real economy and the financial economy, we can avoid the excessive leverage that has been talked about by all these economists. And number two is this, in the West in the last crisis, the leverage was further enhanced through securitization, where you were churning your balance sheet. You book $1 billion worth of assets, and then you churn. You release that through securitization. Now you have another $1 billion. You can go out and book more assets. So when your appetite for credit grows, there is only so much of good quality credit in the market. Good quality credit doesn't grow as quickly as the ability to create credit in the market. So soon you will run out of good quality credit, and then you end up going to brokers who act irresponsibly, what we call the non-tayyib brokers. They go out and catch anyone on the street and say, look, you're entitled to a $500,000 loan, and you should go and buy a big house. You don't have to worry about repayment because it's what we call 3-year very low interest, and then the interest will go up. But don't worry about future. You can flip, you can sell for 700 or 800 and you get your profit. So you find that these kind of what we call the ninja loans, no income or no job, right? Loans have been perpetrated, and you find that the market was flushed with credit, and soon they realized that all these assets have been overpriced, and the whole market reversed, collapsed, and created a systemic risk to the entire world. So Islamic banking or Islamic finance doesn't allow securitization in the way they were able to take a junk asset and make it into AAA. Because from a mudaraba and musharaka principle, when we do securitization, the risks have to be pari passu. All the investors must share the risk pari passu and not tranched according to equity, mezzanine and senior tranches, which what helped the securitization market to shift the risk elsewhere and create more leverage in the system, leading to a huge bubble. So Islamic finance principles, if you apply the tayyib standards and also the fiqh constraints on securitization and short selling and also other forms of derivatives, we will not face the kind of crisis the West has faced. I think if you look at Islamic bankers, number one, we have a role to play in the sense that we need to first understand the difference between halal and tayyib. Often we end up focusing only on halalness. Is this murabaha in accordance with the rules of murabaha? Is this ijara in accordance with the rules of ijara? Often we ignore the fact that this murabaha, ijara, even mudaraba can be used to create mafasid in the system, where you have given excessive leverage or you have invested in a project which is not sustainable. So even even though Mudaraba is risk sharing, if I give investments into a Mudaraba venture that goes and destroys the forest, right? Go into a timber business which destroys the forest, although may give high reward in the form of risk sharing, but in the long term, it basically destroys the environment. So Mudaraba can also be destructive, could be non-tayyab. So whether it's a Mudaraba or Murabaha or Ijara or Istisna or Salam or any form of sukuk, it has to be tested according to the tayyab standard. So the challenge is for the bankers to understand the importance of tayyab and put the platform in place to ensure that the tayyab standards are met. As for the regulators, they are moving towards that. You see now Bank Negara has issued responsible finance guideline. That's a form of tayyab standard. Now you have the equator principle that also talks about sustainable development from an environment perspective. That's another tayyab standard. So we need similar standards to ensure that Islamic banks, the regulators must ensure that Islamic banks are not only tested from a halal perspective but also from a tayyab perspective. From an academic perspective, they should understand the constraints. I mean, it is nice to just put the blame on the bankers without taking the effort to understand the market reality. The ivory tower view is the easiest to give. I would love to be an academic because I can just publish papers and then go home and have a peaceful night's sleep. Because ultimately, they have passed the buck to the market. And often the market reacts, they will choose the path of least resistance, which is the conventional method, because the regulations, the system, the infrastructure has all been tailored to ensure that the credit system is the most sustainable system. To change that into a more responsible system, we need the academic to also explore the tayyab, how to shift from halal to tayyab. So all of us should play a cohesive role in developing the market from where it is today, which is halal, to a gradual stage of idealism. So the tayyab standard will not happen in 5 years or even 10 years. I think it will take a lot longer than that because every standard needs to be tested, need to be implemented. Market needs to understand, and over time you can achieve the tayyab standard that the Quran advocates.
معرفة